Good afternoon. Welcome to OptionsTender. We're going to do a rapid fire video today. We're going to go through SPX, SPY, and we're just going to launch out some individual names down on the 65. So stick around. It's going to go, I don't know how long the video is going to go itself, but we're going to have quite a few names quickly and where I think they might go and kind of putting a storyline together and where this ends up. All right, so if you're new here, go down to that bottom right-hand corner, hit that OptionsTender logo and subscribe. We are doing this video intraday about almost 1 p.m. Eastern Standard Time. If you're interested in getting this video, consider becoming a YouTube supporter on it's about 99 cents. If not, the video comes out at 4 p.m. So let's do this. We have SPX, just a reminder, monthly time frame. 2029 top, 2000 top, 24 top. And, you know, I did these as precise as possible, just right up top there, okay? And let's go all the way over here. We're right at it. We're at it right now. We're also at the channel top confluence there. Any second. I've been saying that over and over. I get it. There's a lot of people there trolling and saying, well, of course they're going to end up right sometime. So we'll see. We'll see what happens. It's the same setup. That's all I got to say. It's the same setup no matter what is said, what's being done. It's the same setup. It just hasn't played out yet. Weekly time frame. Popping above here, little throw over from the 2007 top, but we're right at the 1929 top. Here's a trend here, large bearish rising wedge. Daily time frame. Right here, we're at the top of this wedge forming from here, this top, we're at that top right there. Again, bearish rising wedge. Targets, I think the first target initially, 5-wave move down, will be this breakout zone. Also this trend line heading up. Simple as that. 65, and then we're gonna story tell here. In 65 minute, here's a bearish rising wedge again. And now I drew a couple different lines to show some confluence there. Showed this yesterday as well, just in case price kept going up to the 610. So we have this confluence here. We're kind of at that. Looks like we're getting above. I would say the last target's right here. And I'll show you all three of them. So I don't know if it ramps up into the end of the day today, and then the employment situation is a catalyst. It is a catalyst, but I don't know if we pause today and then we gap up and crap, or if we continue grinding from the employment situation. We'll see. So we're at that minor 150% retracement from this correction. And then our last stop is 610. So again, I didn't know if we'd make it above this 127, but as soon as we gapped over, that's when I told members, I told you guys yesterday, we will not add any more shorts, any more puts until the next major target. Here's your major target, 127.2. There's your next 162. Okay, so we get here, I will add more puts. Simple as that. If we break down from here, I know that this is starting to descend and our move is over. So what should tomorrow look like with this economic data? We've talked about the 10-year treasury rates, hitting resistance, bearish rising wedge, breaking down from it. This initially seemed really good for small caps, right? So with this breaking down, small caps seem to be loving it until they realize it's because of bad economic conditions. Now, I don't know what the numbers are going to be tomorrow, but however it's interpreted, it appears that this is going to break down. At this level, we had a bounce, and we're starting to break down. We're holding here. We'll probably hold this into the data tomorrow. I suspect it will break down. With that breaking down, we could probably see the small cap say, hey, hooray, we're, lower rates, we're jamming. And so what we could see in the storyline, I have this labeled as an ABC into A. Actually, we could do it like this, really. I think I like this better. So A, B, and then 1, 2, 3. Wave 3 is up here. And then we're getting a little 4. You could do it this way too. You could have 3 here and 4 here. It doesn't really matter. And then a 1, 2, 3. So another wave 4 here. Whether it's a higher degree or lower degree, that's up to you. But the next move would be up here to the 162. And so that would be a pretty big move for IWM. And maybe that leads into Monday. But if this sparks these guys to move after this consolidation, and another reason why I'm kind of looking at that is we had a bullish divergence right there. So with that last move, we saw a lower low in price, but a higher low in RSI here. So that could be the next move, the next rotation move back into small caps. And that leads us to the Qs. So the rotation may be out of the Qs in its final move up here. And then we get our final move in the small caps. But I think as of tomorrow, this might start to break down. I'm not saying that it's going to be a huge move. It just could be a nice pairs trade, really, if you want to do that. But this could hold up or do some shenanigans into Friday while the small caps are lifting. And, this kind of just floats around and sets up for 1, 2, 1, 2, 1, 2, kind of a nesting into a move lower. So I don't expect a huge move from the Qs quite yet. It could. The Qs could be down 1% and the small caps up 3%. So we'll see. VIX is showing us a breakout on the smaller wedge and kind of setting up here. Could go a little bit lower for a 1-2 setup here. And we should start to see this continuing to move, even though the market might be holding up well. Also, let's go down the list. Apple, top of its wedge. Of course, there's divergences on this on the higher time frames. I'm not going to show those. Amazon, really crushing it. Again, divergences all over the place. Looks like this is a 1, 2, 3, 4, 5 complete. We have the 1, 2 here, 3, 4, and 5. Tesla. We were showing the ascending triangle this morning, broke out from it, but this appears its last move as a 1, 2, 3. So Tesla might get a little bit of a move down tomorrow, but it should hold up and go for its final targets here. It doesn't have to. We satisfied everything. We have negative divergence. We hit the 371 target here, but we do have another cluster of targets up here at 390 to 400. So that's possible if the market wants to float for a little bit more. Theta decay, they call it. Meta, all sorts of divergences. I think this is played out. I think this is going to start to reverse. NVIDIA, lower high. we're not getting new highs here. I think that this one is easy played. 5-wave move down here, back test, nice sharp zigzag, and I think we move down further from that point. Google, same thing. We just have a channel. We're back testing that channel. I think we break down. I think we've had our 1-2-1-2 setup here, ready to go to the downside. Microsoft could lift up a little bit higher. Now, this is one way to look at it as a triangle, but they like to get tricky with these things. I think the triangle is actually in here. Okay? I think the triangle is part of a something like that. And that just means that I think we have an A. 3-way move up for A. We get a B, C for an A. B, C, D, E inside of there for a B wave triangle. And then we're getting a 1, 2, 3, 4, and 5-wave move here. So is there a little bit more room? Sure. There's still room up to the 450 if it wants. But I think this overall is just an A, B triangle, C, impulse move. We went through SPY. DIA, just jamming away. I'm not going to go into Elliott wave. I don't do a whole lot on DIA, but we know on the higher time frames, negative divergence over and over. SMH, very important. We think that this bear flag has already played out, and we're just back testing. So I don't expect a new high on SMH as well. I think this breaks down from here. I think it was a beautiful play. 1-2-1-2 setup, reversing off of the 62% retracement from this high. This thing's going lower. Anything else that could help move the market? Another way to look at the 10-year, this is the opposite of the rates. This looks like it's going to break out, right? So you have resistance here. You have resistance here, and we have an inverse head and shoulder setup, and I think this breaks out from this point, which means rates are going lower. So, we have some alerts set. We'll keep an eye on that. That I think is pretty much it. We talked about the VIX. All in all, the setup is just the setup's been there, and we're not gonna stop looking at it as a bearish setup, no matter if plays out next week or the week after. Nothing has changed. We're filling out this wedge. Did I think a top was here? Yes. 585. Did I think a top was here? I think it was 580. I want to just be exact here. It was October 11th. So yes. So I thought a top was here, right here at our big zone here at 127. Got above, broke down. Thought the top might have been there, and we were setting up a 1-2-1-2. Obviously, we hedged. We talked about that. We had a big Tesla move, huge Tesla move with the election, and that just changed everything. So, did I think we were done here? 162, absolutely. That was our 162 there. And then when we got this move right here, it was a nice wedge. Looked like it was going to reverse. And that's when it started grinding higher. Now that was relentless, and we're looking for that last move to 610 possibly. That was a leading diagonal. So it looked like a bear flag or pennant. Bear flag, excuse me. And so you had a nice 1-2 setup. If you're bullish, hooray, good for you. Didn't look like it visually, but that's how those leading diagonals get you anyway. So I drew that in, and then you have your wave 3, which is longer than wave 1, and now wave 5 can extend to as long as it wants to, because the wave 3 is not the smallest wave, it's not the shortest wave. So that's why this keeps going further. This is a good definition of a blow off top here in this time frame, where now we have a 1, 2, 3, 4, which 3 is longer than 1 again, You see how everything's extending. Now wave 5 here can go as long as it wants according to Elliott wave rules. Time and price. We have something on the 6 here. That's probably, yeah, that's tomorrow. So we have a little bit of a time ratio here. Did we get a top here? No. Gotta take that one out. There's no real good cluster that I have here, so it doesn't really appear. Friday into Monday, you can consider that a cluster in itself, but only 2. There's not a whole lot going on here. On the daily time frame, we're getting into, we're in it. We're in this whole cluster that we have here, and we don't have anything else for a little bit of time. So, you know, do we get the top today? Tomorrow gaps down? Fine. It sure can. But we'll be looking for imminent top here coming up, and we'll just keep, we'll keep an eye on it. This thing has not gotten, it's not going to go much further. I've heard some people talk about 11,000, stuff like that. I don't know. It's not, we're not getting another move like this. That's already said and done. We've already moved huge, you guys. Huge. It's just that it's grinding out. It's taking time. So our human instincts is being impatient each and every day. I get it. I totally understand. Been through it before. It's happening again. But we didn't know. You didn't know. Nobody knew if it was going to reverse from this point or this point or this point, or here was the top. Nobody knew that. And so just by calling bullish shots doesn't mean that this wasn't the first impulse before heading lower and looking for a 4 and 5 there. Nobody knows, even though you could suspect according to your analysis. So that's what happened. Fine, you got to roll with it. We're traders. That's what we do. Protect your account, put the trade on. But now the risk reward is certainly, and it was here, the risk reward is certainly to the downside at this point. So I'll leave you at that. And thanks for joining us here at OptionsTender. Have a wonderful day. We'll see you at Employment Situation tomorrow.